Hey examinees, welcome to another Edexcel past paper question demonstration. In this video, I will take you along the steps needed to solve the Carson question from January 2023 paper. It is question 17, and it requires you to prepare provision for depreciation and disposal account. So, we begin with the 5 steps we have already established in the previous video on NIAT question. The first step, we write down the date of sale and the date of purchase. The date of sale of this question is 1st May 2022, and the date of purchase is 1st March 2020. You will get these dates directly from the question. It is also convenient to write down the values of sale and the cost of the computer that was sold. Now, we move on to step 2, where we figure out the accounting year, which is basically the 12 months for which company makes the accounts for. All companies do not start from January and end in December. For example, Carson here starts from September. How do you know that? Let's find out. So your starting point is the place in the question that says year end. The year end of this question is 31st August 2022, so the beginning of the year will be 12 months before that. Now you can use a tip here. Just write the month that comes after year end month and change the year to previous year. You will get the beginning of the year. So you get 1st September 2021 as the beginning of the year. Now keep looking for the previous years until you get the date of purchase. The date of purchase of the question is March 2020, so we can stop at the year September 2019 to August 2020, as March 2020 will fall in that year. When you look at this, we see that we need to calculate 3 years of depreciation for the sold asset. But there is a condition. The examiner mentions that a full year's depreciation is charged in the year of purchase, but none in the year of disposal. So we do not need to calculate depreciation for the year of sale, which is the current year, and we are left with having to do the depreciation for 2 years only. So let's start with our depreciation calculations. In step 3, we calculate the provision for depreciation for the sold asset, which means the total depreciation of the sold asset for the amount of time it was with Carson. Provision for depreciation and accumulated mean the same. We have gathered in step 2 that the sold asset was with Carson for 3 years, but the assumption scales it down to 2. So we have to calculate the depreciation for 2 years. The method is straight line method and percentage is 20%. Use the equation cost multiplied by percent, and this further multiplied by new of years. The cost of the sold asset is $3,600 and the percentage is 20%, and the number of years is 2. Do the math, you will get 1,440. This value in step 3 goes to debit side of provision account as disposal, and credit side of disposal account as provision for depreciation. In the next step, we calculate the depreciation for the unsold asset for the current year. In this step, we only calculate for 1 year, because we want to know the depreciation expense that we should put in the income statement, and that's just for 1 year. The equation is the same as its straight-line cost multiplied by the percentage, and it's only for the current year, so there's no need to multiply by the number of years. But we do not have the cost of the unsold asset, so we gotta use our logic and formulate an equation. We have the cost of the total computers, and then we have the cost of the computer that Carson sold. Therefore, the difference between them would give the cost of the unsold computer. The total cost of computers is $16,800. And the cost of the sold computer is $3,600. Do the math, and you get the answer. We don't need to do that with the provision of unsold asset, as the straight line method doesn't require a provision. We have done that in NIAT question. You can check that out. Now, multiply this unsold computer cost with 20%, and you get $2,640. Now, this value in step 4 goes to provision for depreciation account as the income statement. The logic is that it's the expense for the year that we put in income statement under other expenses. After you finish step 3 and 4, you can use those values to start the provision and disposal account. You start the provision for depreciation account with the balance BD. The balance BD is basically the balance in the provision for depreciation account, which is usually given in the question. In this question, the balance given is $9,200. This is the balance that was in the provision account at the end of last year, so we'll bring it forward as the beginning balance for this year. Next, Post the value from Step 4 as income statement on the credit side. This is the depreciation expense, which increases the provision for depreciation balance. Since the provision is a credit account, we increase it by crediting the account. In Step 3, we got a disposal, which means we need to remove a portion of depreciation related to the asset being disposed of. This reduces our balance, so we debit the account for this amount. The balance BD is recorded at the beginning of the year, which is 1 September 2021. The income statement entry is at the end of the year, which is 31 August 2022. The disposal entry is recorded on the date of sale, which is May 2022. After posting these three figures, you can close the account, just like any other ledger account. 1. Find the total on both sides. 2. Enter the higher total on both sides. 3. Find the difference on the lower side. This is called the balance CD. 4. Bring this same balance down to the next year and call it balance BD. The balance CD is dated 31 August 2022, which is the year end. The balance BD is dated 1 September 2022, which is beginning of next year. That completes the provision for depreciation account. Now we can move on to the disposal account before proceeding to Step 5. The computer in question was purchased for $3,600. Now move to the credit side. 1. First record what you got in Step 3 as provision for depreciation. 2. Then, record the value received from the sale, which is $1,950. The detail for this entry is cash book, since it's a cash receipt. After posting these three figures, you have to do Step 5, which is profit or loss. To calculate the profit or loss, you use the equation sale value minus cost of the asset, and then minus the value from Step 3, which is the provision for depreciation of the sold asset. Brackets are very important to get the right figure. You got a negative value, which implies that it's a loss. Calculate in the credit side. Then, calculate the total on both sides. It must be equal. If it's not, go back and check what mistake you have made.